If there is a more transparency around management fees and operation fees, I think that would be highly appreciated from the investor point of view. Like from a lot of guys, like not just performa. Of course, performa is important, but is a dollar save is dollar earn. So if somebody's losing 10% on a management fee, that is the money that is gone from investor side that could be used for cash flow, right?
Welcome to the Power of Passive Income and How to Retire Rich with your host, Vijay Patel. Get your financial advice straight from the experts and learn how to take your first steps towards financial freedom. If you're ready to retire rich, then listen up.
And so, if you look at a deal and they've got a 5% acquisition fee and, a 10% asset management fee, and I'm being dramatic, but, if you see some exorbitant fees on there, maybe that's a red flag. But I think you have to take the overall investment picture into account. If it's going to be a very heavy lift, maybe a higher asset management fee is valid. And so, that's just where the critical thinking comes in. But, for investors, there's a lot of things you can look out for, but thankfully we have the internet nowadays, and it's made the world a much smaller place. So sometimes just with a quick, keystroke, you can find out a lot more than you used to. And, you can look up LLC records on the Secretary of State website. You can look up property tax records. So many public records you can use to validate the information. And that's what it's about. You want to be able to trust your sponsor, but you should also be able to verify what they're saying too.
Yeah. And I think what you mentioned, one key point is the management fees and other fees that people try to. So like when they are trying to attract investors, they are throwing out OM left and right, but OM has all the projections. I have yet to see a OM which is clearly stating, okay, this is going to be the management fees and this. Usually they talk about performance on OMs, right? And try to attract it. So if there is a more transparency around management fees and operation fees, I think that would be highly appreciated from the investor point of view. Like from a lot of guys, like not just performa. Of course, performa is important, but is a dollar save is dollar earn. So if somebody's losing 10% on a management fee, that is the money that is gone from investor side that could be used for cash flow, right? So
sure.
I see a lot of backdooring just based on that. Like people just try to jack up the management fees and other miscellaneous kind of fees. They try to come up with the different words from institutional investors kind of thing. But as an individual, I would say just try to stay away from institutional process, because their game is totally different. They don't care about investors. As we were talking about BlackRock, right? They just stopped distribution, but they will still have funding that individual real estate investors cannot afford. All right. So what about RV parks that you mentioned? Let's just talk about that for a few minutes and we can, I think, conclude.
Okay. As a group, we have some operational experience. One of the partners owns a 50-pad RV park in Florida. And we recently closed on a 106-pad RV resort development in South Mississippi. And this one was positioned very uniquely. We were actually looking at a completely different piece of property, and we were calling the different parks around, conducting the market analyses. Hey, what's your occupancy? What are you charging per night, per week, per month? Do you rent by the month or by the week? And all of those types of things. We were collecting data, and we came across a gentleman, and he said, "Well, I'm booked up for 3 months, but I was going to build this RV resort down the road, and I'll sell you that property." And we went and looked at it, and turns out after Hurricane Katrina back in 2005, I think, it was a FEMA trailer park. FEMA set up trailers for people who had been displaced from their homes. And so there were sewer lines, water lines, power poles already ran, roads were already there, and basically had all the infrastructure in place. So really all we had to do was hit a few buildings, give the place a facelift, and put pads down. And the market and the area, it's very short supply. Within about a 30-mile radius, there's basically no occupancy, and so it was kind of a no-brainer for us. But we closed I think on the 15th of this month, and we've got all the entitlements complete. We've already started work on site, so it's exciting. We're looking forward to it. And we're a fan of this asset class, by the way, because it has very low overhead. With multifamily, the old rule of thumb is the 50% operating expense ratio. At least that's where you start anyway. And with RV resorts, it's closer to 25 to 40%, depending on how high end you go. So we like that. We like that it's not as capital intensive as some of the other asset classes.
Got it. I think we'll just open up a Q&A for like a few minutes, and then we go from there. So Sherry and Matt, if you have any questions, we can take that, or we can conclude.
I'm good, actually. I've enjoyed this.
Oh, thank you. Thank you so much for your time. So I think it's a good time to conclude, and we can definitely, continue this talk. It was nice really meeting you, Reggie. Was nice knowing you in person. I know we know each other through social media. As you said, the world is very small. I get a lot of DMs from a lot of people that, just through social media. And I think, as long as you use it in a good way, it's a very good platform to meet new kind of people, which was not possible like a couple of years ago, right? So thank you so much for everyone that is joining, and we'll meet next week, and we'll be in touch. Thank you so much.
Thank you, VJ. I appreciate it.
Yes.